Okay, guys, well, welcome to this week's webinar. What we're going to do today, I don't know if you guys managed to join us in the last webinar where I introduced you guys to range bars and range bar trading, but what we're going to try and do today is just go over some of the charts and look at some of the things that I'm looking at the moment and really show you how I go about trading with range bars. So before we get started, just to get some of the housekeeping out of the way, obviously this is range bar trading. Quick disclaimer, which is to say that all of the content here is not investment advice. This is obviously purely educational, for educational purposes only. And if you guys like any of the ideas that we come up with during this webinar, obviously you're advised to seek your own counsel and, make your own decisions. But we'll talk about what looks good at the moment with regards to actually taking any trades. That's obviously your own decision. And spread betting or trading carries a high level of risk. Okay. So that is that. Just a quick slide about myself. My name is Alex Ong. I'm one of the co-founders at Traders Corner. The other one is my brother. It's a website dedicated to trader education. We blog about our thoughts and all of that type of thing. I've written a few articles for, obviously for FX Street, for FX Journal, a few magazines. And, we've been involved in this business for quite a while now. So that's enough about me. Let's start talking about the charts and you guys. So I've just brought up the Australian yen chart. You should see in front of you any second now. Hopefully you all can see the chart in front of you. It's the Australian yen, Aussie yen. So first and foremost, before we actually get into some of the analysis, what I want to tell you guys about our philosophy towards trading. Okay, I'm a firm believer in trends. I don't like fading the trend. Whenever I've tried to do it, it's always ended up badly for me. So I believe that ultimately the trend is always going to continue. Okay, now when a trend gets into motion, it's into motion for a particular reason, and it takes a pretty strong reason to then reverse that trend. Okay, so what we look to do when we're trading is first of all, we like to identify a trend. Now, as we know, the market really has two conditions. It's either trending or it's consolidating and getting ready for a reversal. Now, the problem with trend trading on time-based charts is that you get a lot of chop in there. So you'll get periods of time which could stretch, weeks, and sometimes even months if you take a look at the dollar yen chart, where the price does nothing. And it kind of gives you a couple of fake outs and, gives you some opportunities to get in and then it whips you right back out again. So we came to range charts because it eliminates some of that noise. However, it doesn't change the basic way that we trade, which is to identify a trend and then to buy pullbacks in the trend or sell rallies in the trend, if you like. Now, with range bars, they aren't a perfect science. So you still can get periods of consolidation. They're just a lot fewer and far between. And with range charts, the entries are a lot more straightforward as well. So what I have on my chart here, just so all of you guys know, when I'm trading a swing trading method, I trade with the 50 range chart and the 25-minute range chart. I take my primary direction off of the 50 range chart. Okay. I then use the 25 range chart for entries if I miss an entry on the 50 range chart. And I'll give you an example of that in a second. So what I have on my screen here is I've also got three moving averages. They're all exponential moving averages. We've got the 20 exponential, the 60, and the 100. Now, they're there to enforce discipline, really, more than anything else. So the moving averages will tell me that the trend is in motion. Even though we can see it with our own eyes, the moving averages basically gives us a permission to trade. So it stops us from jumping in too early and trying to basically chase every move that exists in the market. Okay, so for us to have permission to trade, we need the moving averages to be in the right order. Now the right order is the 20 above the 60 and the 60 above the 100 permission to look for short opportunities. So basically it takes away one option for us straight away. Okay, because as we know as traders, everything's very easy in hindsight, but when you're in the heat of battle and you're at the hard right edge of the screen, things can become a little bit distorted and our decision making isn't as great as it is when you're looking at things with hindsight. So what we're trying to do with our trading is we're always trying to make things as simple as possible. We don't want too many variables there because, you know, that's where analysis paralysis kicks in. Okay, you've got too many things that you're looking for and you end up never taking a trade, or you take a trade and then another signal tells you to go the opposite way, and you basically chop yourself about and you lose yourself some money, which isn't the best thing to do. Okay, so the moving averages gives us permission to trade. Once we've got permission to trade, then we're looking for the standard sort of price action setups, and they're pullbacks within a trend. Okay, now I say this to my subscribers all the time at Traders Corner. If you can be patient in this business, then in the long term you can make money. If you're impatient and you're ill-disciplined and you're always chasing everything, then you're going to have a harder time with things, okay? So what I mean by this is you always have to wait for the very best setups. And the very best setups for me, for the most part, where I'm going to put in, you know, the biggest positions, are setups like this here. So if we take a look at this, I'm going to take a look at the Australian yen here. Okay, so first of all, for this first trade here, we'll start from the bottom of the chart. Okay. What I love support and resistance. Okay, I love support and resistance in trend lines. If you give me those two tools, I'll trade all day long. It's not a problem. So what we have here with this first opportunity is the market has broken up. Okay, the moving averages have lined up. It's crossed up here, which is fantastic. So we now have permission to take the trade. We don't trade based on that cross. We just have permission to start looking for opportunities. Now, first opportunity, the market rallies off up here and it pulls back. But if we cast our eyes to the left of the screen, we can see that the market has pulled back to a previous level of resistance, which has now become support. And it's actually ridiculous the amount of times this happens on our charts, guys. If you can just wait for these setups here, then in the long run, you should really come out on top. So essentially, we've got the market's broken up from here, it's pulled back. At this point in time, when the market's pulled back to this level, we can then draw in our trend line, as we have here, and we can look to take a break of that trend line. Now, generally speaking, I'm not one of these people that waits for candle closes or anything like that. If I get a break of a couple of pips, you know, maybe 3, 4, 5 pips, I'm happy to take the trade. Now, I know we don't have the extra confirmation there, but for me, from my personal perspective, if I'm waiting for candles to close, I feel like I'm leaving too much on the table. That's not to say that you guys need to do the same thing. It's just the way that I trade, the way that it, you know, suits my personality. And that's something that is individual to every person. You have to find the way that trade that suits you. If you prefer the extra confirmation, then by all means, wait for the candle close. But for me, I'm happy just to take a trend line break. So we get the break of the trend line, and obviously we put our stop below. So if we took a break here, we'd be in there at about 82.18. You'd have your stop below at 81.80. So you've got about a 40 pip stop. And generally speaking, I like to get at least 1-to-1 on the table. If not, preferably I go for 2 or 3-to-1, but it really depends on the price action. So you're always looking for a positive risk reward ratio. Okay. Then if we move up the screen again, we'll get to the analysis of the current charts in a second. I'm just demonstrating to you what the type of setups that we look for. Okay. So if we take a look again, the price is pulled back. Okay. We don't quite get a pullback to this previous level of resistance here, but it's in and around that level. Okay. You can then put in your trend line like so, and you can trade the break of your trend line. This opportunity here would have given you a little bit more heat than the previous one, but eventually it does go up to at least the candle highs. And this is something that I also like to have with my trading. I like to be able to at least have 1-to-1 on the table by the time I get to the previous swing high. Okay, because I don't want the markets to have to do anything extraordinary like break out to new highs for me to be able to lock in some profit. And I like to lock in some profit at about 1-to-1, you know, move my stop a little bit closer, break even or something like that. If I don't have that opportunity with a particular trade, then I'd probably take a smaller position. It's not to say I'd pass up on the position altogether, but I'd take a smaller position because I like to have something on the table by the time we're getting to the highs. And as we can see here, we get to the highs, the market threatens to get above it and then pulls back again. But let's take a look to see where this is actually pulled back to. as you can see, it's pulled back to this previous level of resistance, which has now become support. Sure enough, the market plays around with that level and then rallies off from it again. Okay, and if we move the charts up, you can see these all over the charts. Now, the one thing I need to warn you about with the Forex market, with the FX market, it is, I mean, you guys should know, but there's no central exchange. You're not going to get something like, if you're trading stocks or something like that, where you have an absolute price from your broker. Different brokers will quote different prices. And for that reason, I'm not so interested in levels to be pip perfect. As long as it's in and around a region and it's respecting a region, I have no problem taking that trade whatsoever. Okay, now with this particular opportunity here, you would have got into this opportunity and you would have been whipped out. But the secret with technical trading is you need to be ready to take the second opportunity. Just because you've been taken out of one trade, as you would have been here, so it would have taken you into some profit, you would have been taken out, and it would have hit your stop loss. There's nothing we can do about that as traders. We just need to learn to embrace our losses and understand that it doesn't matter about the next trade. The very next trade has no bearing on our overall performance as traders. It's about a larger sample size of trades, okay? So you get whipped out of that trade, that's not a problem. You just extend your trend line and you look for the second break. We get the second break up here. You place your stop below, and again, this is one of the opportunities where I possibly wouldn't have been looking for, I wouldn't have put on a full size position. Reason being is that I only have a little bit before I'm getting to the previous high. So I wouldn't want to risk as much. It's not as clear cut an opportunity as some of these were. But in any case, you take the trend line break and you ride it for your profit. Okay, so I hope that explains the system and you guys have an understanding of what the system is. Are you guys happy enough for me to jump on and start looking at some of the charts? Or would you like a little bit more explanation as to this? I can show a downtrend indeed. It's not a problem. I'm sure it will be on one of our charts. At the moment, a lot of things are trending upwards, but as we go through the charts, we'll hopefully find one with a downtrend, and if not, we'll go back in time to try and find one. Okay, so I'm going to start looking at the current charts. I have my little hot list here. Go to the 25 range. Okay, so first and foremost, since we're on the Australian yen chart, pretty much with all of the yen pairs at the moment, I'm happy and I'm looking for long opportunities. The yen spent so much time and it was grossly overvalued, in my personal humble opinion. And we've just been waiting for this sort of a move for pretty much the last 18 months. And now the yen starting to weaken without the benefit of central bank intervention. So really and truly, we quite like any long or short yen opportunities, which would be the long yen pairs. So things like the Australian yen, euro yen, pound yen, all of that kind of stuff, we're looking for pullbacks. So this particular chart here, what I would like to see, I'd like to see a bit more past this previous high here at the 8635. Although having said that, if we get a pullback from here in any case, around to about these sorts of levels here, 85, 81, I'd be completely happy to take a buy from there, looking for further move to the upside. Okay, so Australian yen, we're looking for long opportunities. Hold on a second. If we then mosey on over to the pound yen, we can see that ultimately we've got the same setup here. Okay, now we look at the price action of the yen pairs and we look at how you could have traded these on a range bar basis. You can see that it's much simpler to be able to get into trades than it probably would be on a time-based chart. Okay. Now, as I said, we use the 50 and the 25. The 50 is more sort of like a 4-hour chart. The 25 will probably be closer to an hour chart. But in any case, for this particular pair here, it's broken out to new highs. We'd like to see the market pull back somewhat. If it can pull back to sort of like the 126.65 type area, then we'd be happy to take a break up above from there. If it starts to retrace all the way down here, still be okay to take the trade, but we may be a little bit more cautious that there isn't a deeper correction in there. With regards to our pullbacks, we like our pullbacks to be orderly. We don't like our price action pullbacks to be ugly. So pullbacks like this is a nice pullback, this is a nice pullback. All of this stuff here, these are nice pullbacks. These are things that we'd be completely willing to take. Okay, price action pullbacks like this here. This isn't quite as aesthetically pleasing, but obviously they would be trades that we'd be willing to take. But we prefer the ones where the pullbacks are a lot more orderly. So if we can get that kind of a pullback to the 126.60 area, we'd be looking to buy somewhere around there. And that really and truly is the same for all of the yen pairs. So if we jump over there to the euro yen, we can see that this one has got a lot of strength behind it. Obviously, with the euro rallying as well as the dollar yen. If we can get a pullback, now we're probably not going to get a pullback on this particular chart to this sort of area here, which would be nice. Okay, if we get a correction like that, that would be quite a deep correction when you look at the previous move. So that would have to retrace nearly 200 points. I'm not saying it won't do that. If it does do that, we'd still be okay to entertain opportunity, but we'd probably take that from a 50 range chart and not the 25. If we can get a pullback to somewhere around the sort of 107 area, maybe a little bit above, we might not have the benefit of trading from a previous level of resistance, which has become support, but that's not a problem in this particular circumstance because we have a lot of momentum in the market. So, looking at this momentum here, we have to believe that, the price is going to follow that. So if we get a pullback, then we should at least see a test of those highs, if not a push on back towards where it first came from. And if any of you guys see the yen charts, you'll know that the yen pairs have dropped a considerable amount from their pre-crisis highs. Okay, so that's us for the euro yen. Are there any questions? Oops, look at some of the questions here, sorry. Just taking the camera away so I can read some of these questions before I push on up. What about fib levels and fib zones? Yep, you can use Fibonacci retracements as well. Generally speaking, I like anything between sort of like the 38 down to around the 61. I don't mind any of the other levels, but if it's somewhere within those zones, that usually represents about 50% pullback of the prior moves, and that's the kind of thing I like to look for. But I never use Fibonacci. I wouldn't put as much weight on a Fibonacci retracement ratio without another level like a trend line or previous level of support or resistance or something like that. So yes, of course, I entertain Fibonacci, but it's not one of the primary tools in my trading toolbox. It's something that I like to use in conjunction with others. It adds a little bit more weight to some of the trades if they set up in conjunction with something like a previous level of support or resistance or something like that. Do you buy the break of the previous highs or only the swing pullback? Now this is an interesting one. I speak to our members at Traders Corner about this all the time. My brother and I, we trade together. Now this goes to show how, people really need to find their own trading approach. Me personally, I can't buy through the highs. I hate it. There's nothing more that I hate than buying through the highs. I just feel like, we've left way too much profit on the table. However, my brother is someone who actually prefers buying through the highs as opposed to buying the pullbacks because he feels like there's more confirmation with that. So really it's each to their own. Me personally, I will trade the pullbacks all day long. I won't buy through the highs. It's just not something that's in my personality, and it's not something that I can allow myself to do. But if that's something you're comfortable with, then yes, by all means, please buy through the highs. Do I use a smaller range value for any of the other pairs? No, I try not to over optimize this too much. Yes, I know that you have to take into account volatility. But generally speaking, for the swing trading, I use a 50 range and a 25 range, and I use that for all of the pairs. And that seems to treat me quite nicely. I'm not one of these that tries to over-optimize things because I'm a firm believer in having something that maybe doesn't work for this specific market condition, but over the long haul will perform better than any optimized strategy for any one particular market condition. Because what you generally find is that by the time you found your, the perfect range and all of that, volatility changes, and then you have to alter the ranges. So I'm quite a simple kind of guy. I'll go for the 25 range and the 50 range on all pairs for my swing trading. Do I use other time frames with my trading? No, I look at the 4-hour charts just because that's where I initially came from. But generally speaking, for the swing trading, it's the 50 range and the 25 range for me personally. But obviously you guys are welcome to experiment and find what works for you. I just find these time frames, or these ranges a lot less stressful to trade, and I find that the opportunities are fantastic. And trading, you know, the amount of pairs I do trade, there's always plenty of opportunity there. So it's not like I'm waiting for an opportunity over months and months and months. You know, you get a good few opportunities a week. Another question, what platforms support range bars? Okay, MetaTrader supports range bars, but it doesn't come as standard. There are providers out there on the internet that will provide you indicators or expert advisors or something like that. I can't comment for them personally because I don't use them personally, but I do know they exist, and a few of our members actually use those for MetaTrader, and they've said that they're pretty good. But as I said, I can't actually recommend any one provider for those because I don't use them. For my charts, I'm using NinjaTrader. It's a platform which is free as long as you're not trading live, but you do have to pay for the data feed for it. And there are various different providers for data feed. So I use NinjaTrader personally. That's what you see on your chart and on your screens in front of you, or you will do when my charts are up anyway. How do I trade when there are no trends? I don't, to be honest with you. If I'm getting bored, I'll drop down to a lower time frame. But really and truly, if there are no trends there, there are no trends there. You can't invent the trades. The problem that I find with trying to have different strategies, one for a consolidating type environment and one for a trending environment, is by the time you discover you're in consolidation, the market starts to move and you're back in a trend again. So what I find is better is really and truly just to, you know, get one strategy and perfect that strategy and find a way to limit your drawdowns during the consolidation and make the most of the moves while there's a trend in place. But I don't try and trade two separate strategies. Do I use only the swing highs as targets? No, I use that as my first target to be able to move my stop in to break even or move my stop in somewhere closer to lock in some profit. The reason for that is that I prefer to have something on the table by the time we're trading into the highs. But I understand and I know that with trends that generally speaking, the trend will always continue and new highs will always get made. So I don't want to take my position off or all of the position off by the time I get to the high, because then you miss out on, you know, a good proportion of the move. But I do like to have something on the table by the time we get to those highs, just as a bit of protection. Okay, so we apply the MAs and save them, then you use 50 range charts, the equivalent to 4 hours. If nothing found, try the 25 range charts. Yes, ultimately, I used the 50 range chart as sort of the primary chart, the trending chart. The 25 range chart I like to use if I miss an opportunity on the 50. Okay, so let's say, for example, the 50 is already broken out and you've missed that pullback. Oftentimes you'll see little mini pullbacks within the 25, which will allow you to then jump on board with that same move as you would have initially got into on the 50 range chart. I don't use divergence at all to support any of my moves. It's not something I look at. I know there are traders that do look at them, but me personally, it's not for me. Okay. How many pairs do I watch? In excess of 20. Let's see, we've got 1, 2, 3, 4. About 20, between 20 and 25 pairs altogether. You can see them. Oh, you can't see them, but I've got them there. 20 to 25 pairs. Generally speaking, I trade all of the majors and then all of the crosses. I don't really venture into some of the exotic pairs, maybe some Scandinavian pairs or anything like that. Reason being is I like to keep the cost of trading down. You know, us as traders here, we're here to make money, and the spreads that you pay and the commissions that you pay, that's something that's going to impact your bottom line. So I try to stick to the pairs where the spreads are, a little bit lower than some of the exotic pairs. What do I use as other targets? Generally speaking, I look to see where the market's starting to turn. So if we take a look at, hold on, let me put on the camera here. Okay. I like to get at least 2 to 1 on the table, although I will take a look at the market. If we start to get a market turn, so for example, let's say we bought this pullback here, we're at these highs, and then we start to get these candles which aren't really printing, any higher. They're sort of diddling about in one particular area, then I'd take some of the money off of the table at that particular point. You can zoom out to like, take a daily chart or something like that, which isn't a range chart, and look for some of the major support and resistance areas to take the money off the table. But for me personally, as I said, I'm looking to lock in profits by the time I get to the highs, and then I'll just watch the price action. If the price action suddenly looks like it is starting to fade, and we can tell it's starting to fade by we'll start to get candles printing like this that have wicks on them, or the opposite color, then we know that, momentum might be out of this particular move, and we just need to wait for the next move. Does that answer your question? Okay. We've got a little bit more time, so let's try and analyze a few more of the charts. So we've said all of the yen pairs. I don't need to show you any more of the yen pairs because we know that the yen pairs are going to pay us. Well, not pay us. We know that they're trending, so we know that's the case. The next one that I'm looking at, I like the look of the euro CAD at the moment. It's really broken out, and ultimately I'm looking for some sort of a pullback into around the 133 type area. If we get a pullback somewhere around there, I'll be completely willing to take that trade here. We can see that we've got momentum with this particular move. All of the moving averages are lined up. So, yeah, this is definitely one that I'm looking at the moment. Go back to this here. The Aussie New Zealand is also something that I'd like to see it break out below these levels. If we can get a breakout below these levels, then I feel like we can see a continuation of this previous move here. At the moment, there isn't a specific setup. This isn't as far along as something like the Euro CAD, but it has the potential to be. So I'm short biased on the Aussie New Zealand. We jump across to, let's say, the Euro dollar actually is one that I'm quite positive on at the moment. Obviously, we never know what's around the corner with the euro, but in any case, this is quite a nice move here. We see we've got a lot of momentum here. This is very clean price action. All of the moving averages are pointing up. We get a pullback to this level. You would have been in on a break of that pullback there. Now I'm looking for some sort of a pullback to around the 133.50 level. If we can get a pullback to that level, then that would represent almost perfect price action for me, and I would then be looking to buy that particular pair. Just quickly, just to ask the moderators at FX Street, how much time do we have left here? Do we have a couple of minutes, or was it only scheduled for half an hour? I don't want to run into anybody else's time. We've got 45 minutes. Okay, perfect. So let's go and analyze a few more charts. And guys, feel free to ask questions as well. If you've got questions, please stop me and I'm happy to answer the questions. So, do I trade reversals? If the easy answer to that is I do, as long as the moving averages comply. If the moving averages aren't lined up, then no. So it really depends on the price action, how long it takes the reversal to come into play. If you are looking to trade, I guess you're talking about something like a 1, 2, 3 reversal or something like that. You can, of course, take those types of trades. But for me, I need the moving averages. I need really for the trend to be pretty well established for me to take the trade, or I need to see a lot of momentum. Okay, if I see a lot of momentum, then I might be encouraged to take a trade that perhaps doesn't strictly go with the rules. But that's a discretionary thing. That's not something that I recommend you guys do until you've got a bit of experience and you can see what's happening in the chart. And if maybe if you've got some fundamentals behind it supporting it, then you can take those trades. But otherwise, if you don't really have a view fundamentally, then I'd recommend just to stick to the chart. Henkayashi, why do I prefer range bars to Henkayashi? Well, the range bars are pure price action, aren't they? I don't use Henkayashi very much. I don't know a lot about them, but from what I do know, aren't they more sort of average price as opposed to actual price? This chart is the spot charts, not the futures, or anything like that. How long has it taken you to read the charts well? It takes a lot of screen time. It's difficult to say how long it took me to read it well. Ultimately, I've been trading since around 2005. So that's, what is that, nearly 7 years now. But with regards to when I was able, I guess a year or two of really looking at the charts, and you start to really start to gauge where things are going. But, you know, I wouldn't say that you'd be able to do it within 3 months or 4 weeks or anything like that. It does take time. You can start to spot the patterns in the chart, but it takes a little bit of time of watching price action to allow it to start to actually tell you a story about what's going on. You know, and ultimately that's what the charts are. We can't take any one single candle into isolation. We've got to take the whole chart and put the whole chart into context and ultimately look at the story that the chart is telling you. Does that make sense to you guys? Excellent. Yes, with the major data releases, of course, I concern myself with things like non-farm payrolls, unemployment claims, interest rate announcements, inflation figures, if that's what the markets are focusing on. I look at the major announcements, but I also look to see what the market's interested in. So, for example, back in, even today, but more so back in 2008, 2009, during the real part of the crisis, everybody was interested in the housing numbers because the whole housing market was, falling out of bed. So those numbers tended to cause a bigger movement in the price than perhaps they would have done when people weren't as concerned about those sorts of numbers, but perhaps they were more concerned with the interest rates or the inflation or something like that. So it really is dependent on what the markets are focusing on at any one time. And to understand that, obviously, just, read the headlines in Bloomberg or the FT or the Wall Street Journal or something like that. But yes, of course, I take a look at data releases and news releases. Have I tested range bars in combination with Ichimoku? No, I haven't. But please feel free. If you feel like it can benefit you and it's something that's worth looking at, then yes, definitely take a look at it. Me personally, as I said, I like to try and keep things simple. So, simple is better for me. So I try not to add too many indicators in there that clouds my judgment. Are there times in a week when you're not bothered to take any trades? I try not to trade late on a Friday. That's really the only time I don't trade. And perhaps sometimes on a Sunday evening as well. I like to see the markets in full motion before I take any of the trades. I prefer not to carry the trades through the weekend unless I've got some sort of a buffer on the table, but you won't really catch me taking any new trades on a Friday afternoon UK time. What else? On average, how many pips do you risk on a trade? Okay. On any one particular trade, it depends on the range chart that you're trading. If you're taking it off of the 25, for example, then your average risk per trade is going to be somewhere between 25 to 50 pips. If you're on a 50, then it's going to be somewhere between 50 to 100 pips. But this is something I'd like all of you to understand here, and this will push you beyond sort of like retail and quote unquote rookie type trading. Trading isn't about the amount of pips that you're trading. Okay, it's about the percentage risk of your account. So it doesn't really matter to me whether it's a 100 pip risk, a 200 pip, a 500 pip risk, because that's all going to equate to the same thing when it comes down to the bottom line of my account, which will be X percent. It will be whatever I'm comfortable with for that particular trade and what my rules dictate. Okay, so that's what the pips are on any particular trade, but I would try and steer you towards looking at this from a business perspective and ignoring the amount of pips and really focusing on percentage risk. That will be a lot better for you in the long term. Is 10 p.m. each Monday night, Thursday okay? Yeah, I mean, that's not a problem. That's when the market's closed, the New York market's closed. So you can look at trades at that time of the night. That's not a problem. I like the way you compress the chart. When did you start doing this? I've always compressed the chart. I like things to look nice. It's got absolutely nothing to do with trading, but for me, I like things to be aesthetically pleasing. So I compress the charts until I can see what the price action is doing. Sometimes when you open up a chart, the candles they seem like they're all over the place, but if you compress the chart, you get a bit of perspective. It's easier to read the price action. Have you any advice on how to be patient? Very tough one. The moving averages are one of the tools that you can use because they will give you permission to trade. The other one is really to try and find some set rules. Write down some rules. Have them in your office or wherever it is that you trade. Just have some rules there that you go through that you have to almost have a checklist before you enter the trade. Okay, so have your checklist in place. And if one of the points on your checklist aren't, you can't tick one of those points, then don't take the trade. You really need to start to look at this as being some sort of a business, guys. It's not the markets. Yes, they can be a lot of fun, but ultimately this isn't entertainment for us. Okay, as professional traders, we're here to make money. We want to make money off the moves in the market. I'm not here for entertainment. If I want entertainment, I'll go and watch. Well, I won't watch a Champions League match at the moment because it's depressing as an Arsenal fan, but I'll go and find something else to do to entertain myself. The trading for me is a business, and it's my way to make money and make an income. And it shouldn't really be any more than that. It can be fun. Yes, of course, people that say you don't feel pain when you take loss, of course you feel pain. There's nothing you can do about that, but you can limit it. Okay? Do you have time to remind us how to set the alert for when it pulls back to level we want to save a lot of screen watching time? I can't do that on this one, Laurie. But if you send me an email, we can talk about how you can put that onto your chart. Then maybe I'll come up with a video or something I can upload to our site where you can watch it. Nice trying, trader. We can be friends now. Where am I based in the UK? London. Based in London. Okay, there. Any other questions, guys? Okay, whilst you guys are typing and all of that kind of stuff, I want to leave you with some advice for your trading, and that really is, as I was just on my soapbox, I'm going to get back on it again, and really say to you guys that trading, it's very simple. It's definitely not easy, but it's 100% achievable if you're willing to put in the time and the effort. It's not going to come to you overnight, but if you've got the discipline, if you've got the focus, then over a period of time, you can get good at this. You can get profitable at this. I know that some of you guys out there listening to this or watching this on a recording or something like that will be wondering, do people actually make money trading the markets? And yes, of course they make money trading the markets. It's more difficult as a newbie because you only have what's on the internet there to show you how to do things, but it can be done. My brother and I came from a background, we weren't in any investment bank or anything like that. It was something that pretty much we taught ourselves. We had a little bit of help over the way, and now we do have various friends in some banks and trading friends. But it can be done. You have to be patient. It's not easy. But if you understand that and you're willing to put in the effort, then of course, you can make money at this. Did I have a mentor? Yes, we had a few different mentors, to be honest with you. I can't give you their names. I'm not sure they'd appreciate it, and they aren't necessarily people that, sell their services. But we've got a few people that we talk to in times of woe and that type of thing. Oil price, I didn't look at it yesterday, Lloyd, so I can't actually comment on it, and I don't have a chart up here I don't have an oil chart, crude chart here for me to be able to analyze for you. So sorry about that. Do I have losing trades? Of course. Of course, I have many losing trades. I have losing trades after losing trades. It's just the way the market is. There's nothing you can do to get around that. And this is something as new traders, and I'm not saying that everybody here is a new trader, but this is something that new traders really struggle to come to terms with. And that's the fact that you are going to have losing trades. There's absolutely nothing that you can do to get around it. As sure as the sun's going to come up tomorrow morning, I guarantee you will have a losing trade. But if you stick to the rules and you trade a plan and you've got a plan with a proven edge, then I can also guarantee you that you will have winning trades as well. Okay, and it's very, very hard in the beginning to get this on board. If someone gets a system with an 80% strike rate, a new trader tends to look at it and think, what indicators can I put in here to eliminate all of the losses and get myself to a 90 or 100% strike rate? You don't need that, guys. You don't need the 90% strike rate. You don't need a 100% strike rate. You just need a good enough strike rate with a positive risk reward, and you can make money. There have been times when I've traded this system and I've come out with sort of like a 50-50, 50% strike rate, sometimes even lower, but I've managed to be profitable. I have a friend of mine whose strike rate is absolutely woeful. We did a call with him last week for some of our members, and I think he quoted something like 27% strike rate. For me, I couldn't trade a system like that, but he trades that system very well, and he's profitable trading that system. So really learn to embrace losing trades, guys, because they will hit you. Do I think it's important to have a mentor? I believe it's important to have some sort of a coach. Yeah. You need someone to keep you accountable to your actions, because if you don't, then you'll do silly things and then you'll forget about those silly things. You'll be like, you know what, that never happened. That was stupid. I'll never do that again, so I can just forget about that. But in reality, you'll come to your charts again and you'll make the same mistake. If not tomorrow, if not next week, then maybe in 2 or 3 months down the line, you'll make the same mistake again. So it's important to have someone there to keep you accountable to your actions. It doesn't necessarily have to be a trading mentor. It can just be, a life coach or something like that. But it needs to be someone that you talk about your trading with, that you can talk about the highs and the lows and any theories that you may have. What's a normal average win? What average win rates? Average win percentage, somewhere around 60 to 70%. If you're taking all of the trades and you're being disciplined and consistent, you can expect that sort of a strike rate. Any other questions? I'll give you a second or two. So I think we're coming up towards the end of our session. So we'll have to start wrapping it up. But if anybody's got any questions, please feel free. Nope, everybody's happy. We like a happy room. Do I run a trading? We don't at the moment. No, it's something that we've been speaking to our members about, and possibly we're going to put it into play in the near future, but we don't at the moment. And if we did, it wouldn't be a signal service. We don't believe in those sorts of things, and also we're not really regulated to do that, to be honest with you. So we wouldn't be giving signals, but it would be a trading room where ultimately we educate people whilst we're trading. You can look at our screens and all of that kind of stuff, but yeah. So it wouldn't be a signal service. It would just be watching us while we trade, and we help you to spot the right sorts of setups. When NFP comes out, range bars prints too quick since first week. Yes, it does. But to be honest with you, I quite enjoy trading the non-farm payrolls on a range bar because within that those first few minutes, on a normal time-based chart, you can't see the pullback. But on a range chart, you can see plenty of little opportunities to jump in the direction of the trend. So, the bars do print, but you do get pullbacks. So I quite enjoy trading NFPs with range bars. Do I have a maximum number of pips? Not pips, percentage that I can lose a day if I'm for the swing trading, no, not so much. I just take every trade there is. But when I'm intraday trading, yes, I limit myself at sort of like, 1 or 2% per day. If I reach that sort of level, then that's me done for the day. Generally around 1% a day. Any other questions, guys? Why are range bars better for me? Because they eliminate some of the market noise, and they allow me to get into better trades. I believe the price action is a lot clearer to spot. I believe the entry signals are a lot easier to spot. So that's generally why range bars. It just clears price action up for me. I like trading price action, but I don't enjoy the noise. So it eliminates the noise. How do you know when a trend ends? You start losing. No. Well, you don't know when a trend ends. Ultimately, you still got to take the trades in the direction of the trend until you start to get lower. If you're in an uptrend, you start to get lower lows being printed, and the moving averages start to turn down and they start to recross. When the moving averages aren't lined up, then the trend has ended, and you're not looking for trades in that particular direction. But you won't know it's ended until it's ended, if that makes any sense. And that means taking a couple of losing trades there. How much leverage do you use, if any? I try to steer away from using too much leverage. Generally speaking, 10 to 1 will be the most I'd use. I'd never go for something like 100 to 1 or something like that. It just doesn't make sense. I don't want to destroy myself. So, okay, guys, I think we've come to the end of this session. FX Street, our wonderful administrators there. Do we have somebody coming in behind us? Do we need to wrap it up now? We need to wrap it up. Okay, guys. Well, thank you very much, everybody, for joining us. We'll be doing, okay, wonderful. We'll be doing, some other webinars into the future. We're now going to be doing webinars every 2 weeks with FX Street. One of them will be sort of analysis sessions like today. Other ones will pick a topic, to teach you guys about. And I don't know if it's possible, but, you know, we're open to requests for the webinars as well. So if you have something that you particularly like talking about, drop us an email or something, you know, go to our website, and we'll make sure that we bring it up in the next webinar here with FX Street. So guys, thank you very much. The session will be recorded as pointed out over there, and I look forward to speaking to you all soon. Take care now. Have a good day.